There's a bull cycle in precious metals and mining stocks that has begun. If you want to make a bunch of money in the metals and mining space in the coming years, you're going to want to go find some vanadium. We have to be early, if you remember, as investors, in a scenario, in a cycle, in a move to make huge returns. You have to be early, and it's not in the future. It's already happening today.
Eric Muschinski, who writes the Gold Investment Letter, is also a long-term investor in many of the smaller mining names, and he's going to talk to us about why he's enthusiastic about this space over the short, medium, and very long term. Eric, it's absolutely great to see you, and today I think we're going to be talking about the metals and mining space, which again is kind of very much at the forefront of everyone's thoughts because we're seeing this move in gold almost back to the all-time high. So everyone is getting very, very excited about the metal space once more.
I take a pulse of the investment community in this space. I launched the Gold Investment Letter back in 2011, and I get to read the litmus test of the investment community. A lot of people are still either fearful about the general macro. They are, they're burnt out and bombed out in a lot of their investments, except for the last 3-4 months. We have had a bounce since that October low in the general market in like the gold miners, silver miners, and mining stocks. They really haven't seen the capital flows yet. So a lot of these investors that have been in the space are very demoralized. So it takes time to get them from fear and apathy over to I got to take some action. And I was actually right. I just need to get back on the right side of the curve. We're not really there yet. I'm glad it's getting attention, and this space should get attention for many, many reasons. But it's a good time to take a look at it because we're not seeing that enthusiasm in the core group. They're still dragging their feet.
Obviously, the macro space, and the macro guys also look at gold as this sort of key variable, as it were, when we're seeing central banks doing what they're doing. But what is the big story really here behind really gold? It's the commodity of gold, as you say, which people are focusing on, and to a lesser extent, silver, but people are getting excited about silver as well. What's the real story behind that's seen gold going back to this sort of all-time high price?
The gold price is actually well into all-time high territories in places like Argentina, even Canada, Russia, the places that have seen, even recently Colombia has very high inflation numbers. So the protection mechanism of gold there has already started to really kick in. But in the US dollar terms, which is what people mostly care about as at least for now, still global reserve currency, we are seeing us push back to that number of previous highs, and I think it's clearly going to go way through there. But I look at gold, and I have looked at it for a long period of time, instead of trying to guess these intermittent little bit of moves. Ever since Bretton Woods fell apart, I think this is the most important timeline that I look at as an investor. We're looking at just over, 51 years, so half a century of gold against the US dollar has continued to return compounded 9.5% to 10% annually. Right now, with where it is, it's closer to 10%. We're seeing all kinds of potential problems in the United States banking system. Obviously, there are more, I think, shoes to drop there. And then we still have a pretty hawkish, at least maybe they're fronting. But Jerome Powell and the group is talking about another, quarter-point raise coming up in the face of our banks blowing up. We've never seen the Federal Reserve in the United States raising rates in the face of a crisis, and a banking crisis at that. And nowadays in the digital world, things happen so quickly. The amount of money that left Silicon Valley Bank and Signature Bank in a 24-hour window was extraordinary. We've never seen anything like it. And all these things speak to protection and defense. Where can you play it? And gold is the behemoth. It is the gorilla. We have a new kid in town, which is Bitcoin, which I'm a big bull and proponent of, but gold's millennia is here to stay.
Is this a story about gold, the commodity, silver, the commodity, or is it eventually going to be about the miners? Because the question I always get asked is, when is it that we play the miners? Because gold moves, and then if you get in at the right time into the miners, particularly in the silver space, but also the gold space, you get that outsized move, that high beta resonance from these stocks. Is it still a story about the commodity, or will it start becoming a story about the miners themselves?
You're speaking to my heart, Roger. I love this topic, and this is the miners are my baby, and I've been very active in this space. And it's a very interesting space that is probably the one of, if not the worst businesses in the world, because it is brutal. It is brutal to operate. It is very difficult to find these deposits from an exploration standpoint. So what you're doing is you're just raising money and then not destroying it, but it goes into the ground, which is a hope for a future value that is going to come back out either by the organization that is exploring, which usually I don't recommend. Explorers are explorers, producers are producers, developers, or somebody else buys it and goes ahead and then brings that mine into production. But you're talking about, in a lot of cases, decades of work and hundreds of millions of dollars, being spent, whether it's gold or it's a particular critical metal like vanadium. But these are highly cyclical areas. I've been through a bunch of different bull and bear cycles. The worst one was when we had the launch of the gold investment letter in 2011, October. That next 4 years into January of 16 was a grinding, destructive bear market that saw valuations go down by, in a lot of cases, 90%. But then we saw this massive leap from January of 2016 until July or so of that same year, where a lot of those mining stocks tripled. And I'm talking about the larger ones. The exploration companies had a massive lease on life, many of these stocks going up 10x in a short period of time. In 2021, the mining stocks were in a bear market already. In 2022, we saw the collapse of asset prices everywhere, which was actually almost led by a lot of these metals and mining companies as well after a bad year, which exacerbated the situation. It felt like going into the fourth quarter of last year, the worst market that I ever remembered in terms of share destruction and value in the mining stock. So, typically when that happens in any sector, you're going to get something come out of the other side in a bull cycle, especially a cyclical area like commodities and precious metals, where the move is pretty powerful. Back in 2020, I talked about a company called McEwen Mining, which had a tremendous amount of share destruction that occurred during some operational issues after an initial big spike. That company had trended lower along with the sector, which is tough to buck. But in October of last year, I called the bottom on that stock. That stock was trading at about $3 and change in the United States. Today, it's just under $10. So we've seen a triple off the bottom, which is pretty ferocious. And that is for a company that is in the $500 million market cap valuation area. That's a fairly decent sized company with a lot of room to go on the upside, I feel, because of the share destruction that happened. But we're starting to see that money trickle down even a little bit further, selectively, into the small juniors. And that's when I think we're going to start to get much more attention into this sector. We're going to have those type of popping like popcorn scenarios. And we're not quite there yet, but that's why you wanted to look into this now for your viewership, because it's still a bit early in that transition, but I see it everywhere. There's a bull cycle in precious metals and mining stocks that has begun, and these can be very powerful. So if we see rates cut and risk assets are on, we're going to see this stuff just absolutely fly. But even in a very nasty recession, this is not a bad area to have some capital in either extreme scenario going forward, especially after the whole space has been decimated for 2.5 years.
And so now I'm going to put my cynical hat on there and sort of say, okay, it sounds like the setup's there, but it's kind of that question of why now? Why is it going to happen here? Why do you think this is the time to start accumulating these versus, could this be another 2-year desert where nothing happens and gold price moves a bit, but actually the mining stocks themselves, they labor it?
Over the course of the next 5 years, everybody in the commodity space, in base metals, critical metals, everybody is screwed. There are big supply chain problems coming, and this is fairly evident, but the money's going to be made by those that actually position themselves before that starts to become evident to everyone. We have to be early, if you remember, as investors, in a scenario, in a cycle, in a move to make huge returns. You have to be early. And it's better to be a little bit extra early than it is to try to chase these things a little bit later. In the case of uranium, Back in, I believe it was around 17, I started to scour the world for some of these just tiny little junior uranium exploration companies that I felt had all the ingredients that they were going to survive and then potentially thrive. I found a company called Encore Energy at that time, and it was trading at 5 cents Canadian. And we ended up leading a round of financing at, I believe it was 6 cents Canadian. We had a 10-cent warrant attached to that deal. It seemed like I was a genius because in the ensuing 2 to 3 months, uranium stocks caught a bid, and Encore went up to 20 cents a share. That stock then started a 2.5-year slide because uranium's bear market, that was a dead cat bounce. The stock went all the way back to 4 cents. Obviously, I had dozens, if not hundreds of my investors saying, what the hell's wrong with you, Muschinski? This thing is a dog and I'm out of it. And, you pumped it up. And I said, look, I'm sticking with Encore because I'm sticking with uranium because this steam is not played out yet. When you own something at a nickel or a dime or 15 cents or 20 cents a share, we're getting into small companies. So the disclaimer is, you need to be careful because buying a lot of them can move them. You have to be selective in how you buy them. Not for everybody, obviously. This area is littered with bargains still because the money is not flowing down there. But if you believe it will, and you're seeing it already in the producers and then now in the developers and things, it always happens. So you may want to start looking ahead to some of those smaller areas.
Clearly, they're risky, they're high risk, but they also have potentially high reward. And people shouldn't stuff all their eggs into one basket. They should spread it around a bit. But it's a patient game. It's a long game that you're playing here. And I think what's really interesting there is that, we've been talking about initially gold and silver because that's grabbing the headlines. It always does because you can get some big cap names there. Something that we talked about together before, and you have a particular interest in, you mentioned it, critical metals, where some of these opportunities, these beaten up stocks, small cap, but with a potential sort of asymmetric payoff. What's the stuff that you're looking at there?
I find it to be such an interesting paradox and dichotomy right now because of what is coming and what is impending and what is so clear in terms of the electrification and battery metal move and the move away from fossil fuels, which governments aren't the best at managing this stuff. They get over political and they say that these things are going to happen in X amount of years, and then all of a sudden where are those coal plants again? We need to fire those back up so that we have electricity in Greece this summer. Back in 2017, we had very high valuations because a lot of hype was coming in the market. And we were still a decade or more away from when the real world was going to be driving the demand side. And, you didn't really know if the supply side was going to be as bad as it is now, because over this last decade, we could have seen a tremendous amount of investment. Nickel is going much higher, I believe, in price because you just have a real supply constraint there. Every iteration of lithium-ion batteries that I see, nickel's in all of them, okay? And it's not that big of a market. Copper as well, which is a much larger market, obviously, is needed. An actual weight of this stuff, you're hundreds of pounds of copper, nickel, and things that go into every single vehicle. In just the last year, companies like GM, which is locked in, they're giving $650 million to a company called Lithium Americas. And now at Lithium Americas, you have a scenario where that is a very developed asset about to go into production. There's been hundreds of millions of dollars already put into that, finding it, developing it, building a mine. So GM's looking not too far in the distant future to lock up lithium supply. I have significant money in these deals, and I've been buying them for years for these exact points. McEwen Mining, which I just mentioned very briefly, this company has undeveloped copper assets in Argentina called Los Azules, and it's massive. It's going to be decades of production of copper. Stellantis is the 4th largest automaker in the world. They own Dodge, they own Chrysler, Fiat, Maserati. There's a dozen of these names, Alfa Romeo, that are underneath their umbrella. Not a household name, they're big. They invested into McEwen Copper, a division owned by McEwen Mining. That mine is years away from production. But they know that they need to secure that copper, as well as a lot of these other elements, the critical elements as well. Look at nickel. I own a very large position in a company called Giga Metals. which is a Canadian firm that has for decades been developing and growing what is called the Turnagain deposit in British Columbia. They're going to be coming out with a pre-feasibility study in June, which I think could be a huge catalyst. This is a 40-year plus mine life of nickel and platinum group metals and cobalt. These are not just laying around everywhere, okay? And this has got a $25 million US market capitalization. It's a small company, so you can't buy, if you're a larger fund or something, you can't buy a big stake in something like this without moving the price up. But at the same time, this thing's got an NPV, a net present value, at where nickel is today, 10.5 per pound or something like that. It's over $500 million. And then every dollar that goes higher in the nickel price above $11 a pound is $400 million in NPV to Giga Metals. I mean, we saw nickel recently go up to like $13 a pound, and Giga Metals stock barely moved. This speaks to the poor market environment that can only, I think, get better. But anyway, these guys locked up about 7 months ago a deal with Mitsubishi companies. Mitsubishi came to them and they were talking for years, and finally did a deal whereas Mitsubishi bought a 15% stake in the Turnagain asset itself, not in Giga Metals Corporation. $8 million for 15%. Giga at the time was trading around where it's trading now. Stock went up 70, 80% for 3 days, fell back down. It's back down to actually below where they announced that deal with Mitsubishi. So Mitsubishi pays 100% premium to what the company is trading at in the marketplace to lock in a 15% stake in this asset that is like 5 to 6 to 7 years away from production. We're seeing these corporations that are looking out past the current producers, these junior mining companies that are years away, or, even some of the bigger mining companies. They may have a mine that's not coming online for 3 to 7 years, and folks are coming in to secure their supply. Now, here's where the big opportunity is that people like me, I own probably, I think it's around 3.5 to 4% of Giga Metals personally that I've accumulated. I'm still a buyer. So, this is talking my book. But now what you're seeing, we saw with McEwen, Stellantis. You've got Lithium Americas with GM. You've got Mitsubishi companies. There's more of these deals that are popping off in lithium and nickel and copper and all these different areas. You're going to start seeing it in manganese. We're going to see it in molybdenum. We're going to see it in vanadium. The longer that they wait, or the further they are in line to secure these type of deals with these companies, the more that we are going to make them pay for those stakes or those companies. It's going to be a FOMO situation in the mining companies because this has to happen.
It sounds like years of underinvestment, particularly since the sort of mining and commodities collapse 2014. This whole space has lacked investment, has been starved of capital. But we've got this mega trend that we can't avoid that is in motion as we speak. That means that demand in 2 or 3 years' time is really, really going to pick up. You've got the consumers, so the Mitsubishis of the world, who are already out there putting their money in, but you've got sentiment on the back foot, and therefore these opportunities just haven't been taken by the general investment community. And it's happening across the board. And you said that there's critical metals and vanadium. You said that this is one where you think this is all happening as well.
People that I know that run multi-billion-dollar private equity funds in the space arena, the energy arena, nuclear fission and fusion projects that are very cutting edge, and never heard of vanadium. And many people haven't heard of it yet. We now just saw the G7 on Friday with this $7.5 billion commitment to fund critical metals. The state of California just came out and finally purchased over $150 million, I believe, dollars worth of vanadium redox flow batteries. From an industrial scale backup clean battery, you're going to use vanadium. Vanadium redox flow batteries are what they're called. The way that it goes with a lot of these exploration companies, a lot of them are small, and they start out by going out there, they're Wild West wildcatters, if you will, trying to find these deposits. They have a number of investors that will fund discoveries that get to grow into a certain point. And then the producing companies, the bigger companies, end up buying them. And I was looking at one of the most successful investors and operators in mining in the world ever, as a guy by the name of Robert Friedland. And he made a comment that got my attention, which was, if you want to make a bunch of money in the metals and mining space in the coming years, you're going to want to go find some vanadium. and vanadium redox flow batteries are the future. But China and Russia are producing over 75% of the world's vanadium. And the last I checked, they don't really share very well with us, nor do they want to. There's a lot of vanadium in the United States and in Canada. But we have just a couple percent of the global production of vanadium exists. Many of the Asian countries have adopted this vanadium redox flow battery on the industrial scale side, which is basically a market that is around as large and will continue to grow at 30, 40+% compound annual growth rates for the next decade or two, around as large as the EV market. And there's just not a lot of ways to play vanadium out there.
So vanadium sounds very much a niche play. Is the ways of playing vanadium for the general investing public?
We've got just a couple of choices in the sense of larger producers. The way that I looked at it is that there's a company that is very unique. And by the way, I own like over 7% of this corporation. It's $30 million or less US market capitalization play. It's a company called Phenom Resources. Stock right now is about 30 cents US, 40 cents Canadian. They own the largest and highest grade vanadium resource, and it's at surface in Carlin, Nevada, in North America. We're talking about at least 450 million pounds of vanadium, which is trading around $9 a pound. So
Phenom Resources, that sounds like a familiar name. Can you talk us through that one?
it was the corporation that we invested in initially back in 2017. It was November. Our group led a private placement. And then once that financing was done, the company changed its name to First Vanadium Corporation and moved along for years with that moniker. And then in 2020, after the crash of March, world melted down, I had gotten back involved and started accumulating a new position in First Vanadium. And part of the reason for that, interestingly, is that one of the most prolific mine finders ever in Nevada for gold. There's a gentleman by the name of Dave Matheson. And Dave had been brought in to take a look at geology and look at it from a standpoint of what is the possibility that there's a large gold system, a Carlin-type trend gold system below it. And he believes that potential gold deposits that are very similar to this, Gold Strike and Gold Quarry. And those are two that are not far away on the Carlin trend. One of them hosts 50 million ounces of gold, and one of them hosts 100 million-ish at Gold Strike. Those are massive, monstrous, elephant-sized gold deposits. We just had an organic conversation, and I said, what about Phenom? Do you want to use it? And he said, yeah. So I was like, you have my blessing. I mean, it's not my company, but you have my blessing to certainly use it. So that's where the name Phenom came from in this case.
Obviously, we're getting into a real niche here, but you're seeing these sorts of opportunities in vanadium, and you're playing that space as well. Is that right?
With Phenom, this company out of Tokyo had approached Paul Cowley, and again, years away from production, to lock in production and supply for what they had developed as a next generation solid state vanadium-based electric vehicle battery. This company, and I have not, this is not quantified yet, but they have developed this electric vehicle battery with vanadium power that is not flammable, which is huge, goes nearly twice the distance on a single charge of vanadium versus lithium, half the cost because of the rocketing price of lithium, which has not happened yet in vanadium, but I think that it will, and can fully charge an electric vehicle battery in less than 30 seconds. The only issue, and this is something that we're looking at right now deeply, is how much vanadium exists in the earth. Is there enough of it to disrupt lithium? Because there's a lot of lithium. There's also some very funky studies that have been coming out recently, just in the last year. There's a title called The Brain-Like Memory of Vanadium Pentoxide Glass. That was a deep study by a group of scientists that show that there are endless applications of this in technology, where you would have in a phone screen, a computer screen, in buildings, in glass, additional memory capabilities far beyond what exists today in anything that we have in glass, or something that also can be done as it goes offline, the memory stays. They're finding very interesting things about vanadium. Vanadium also is needed in next generation rocket technology, which is why it's a national security risk. About 80-90% of it is used in stainless steel. You add about 2% or so vanadium pentoxide to stainless steel, and it makes it twice as strong. So that is the baseline of the usage of vanadium. But just in the vanadium redox flow battery area, this is a substantial critical metal opportunity that people just don't know about yet. So here you are today. This is my special little critical metal that I really like a lot.
Just step back a little bit, because obviously, the vanadium, very niche, very specific. For a risk-averse investor, what should they be doing?
I own companies like Vale. Vale is a very, very large company. You've got Rio Tinto. These are the largest nickel and copper, producers in the world. And I think that they're going to do very well going forward. Those are areas you could put big money. You could also go into, when it comes down to gold miners and silver miners. And what you can do is you can own things like the GDX, which is an ETF for the gold producers. GDXJ is where you own the juniors, which they don't get down to being this small. They usually are at least $50, $100 million market cap, and most of them, even if they're classified as juniors, are over $1 billion. If you want real torque, don't be afraid to come back to the ghetto, guys. Back alley, down in the 25, 50, $1 million market cap area. Because if you end up owning and you buy, say, a smaller position that's a tenth of what you normally put into a core equity position, well, if it goes up 50, 100, 200 times, still turns into a lot of money. I mean, you just don't need as much in these deals. You look at like a Giga with their nickel asset. I don't think that they're going to sell another piece of that asset for less than $150, $200 million valuation. The thing's at 25 right now. If it goes even halfway there's a whole new group of investors that will come in and looking at it like it's safer. But it's safer when you buy it cheaper and you're already cushioned by multiples in your investment. But then you've got SIL is the silver producer ETF, which is a great way to broadly play, the silver space. I'll give you one name in the silver space too. That's a turnaround situation sort of, but they're one of the largest silver producers in the world and public companies. And that's First Majestic, which is a $2 billion market cap corporation. So that's a way to have you could buy a big position if you're a fund manager or a family office or something, or a pension. That's an interesting play. Just look into the dynamics there. They've recently been hit because they ran into cost structure problems at their Jarrett Canyon mine that they're building in Nevada, which is a gold mine. So you get 50% gold and silver in that play, but that Jarrett Canyon's huge. 400,000 ounces of gold production a year when they figure that thing out. In the interim, you've got a ton of silver exposure and a stock that should be probably trading at least 100% higher. The reason I feel very good about it right now too, just from experience, when I was looking at all these different companies in 2017, 2018, all of them had different data from different places about the EV adoption curve. And when whatever their metal of choice was, when that supply apex was going to hit the demand curve apex. And I made a mental note back then that just about all of them were showing 2024, some 2025. And guess what? That has come true. We're there. And when you're seeing groups from around the world come to the companies that aren't going to be in production for 5 to 7 years, are knocking on our doors to take stakes in offtake agreements for deals like that, which is just starting, guess what? This is going to turn into a FOMO situation over the next couple of years, and your investor base can take advantage of it.
If people are thinking there's a recession coming, these are high beta industries in terms of market beta. We would expect them to probably perform badly, but you're saying basically here, think about accumulating even now. Yes, you'll probably get better opportunities if we have a recession, just the way the nature of the market is, but don't wait back just because of that. Don't wait for the recession. Start thinking about these sooner rather than later.
If you use logic and reason, if you're a corporation that needs to build a car or a refrigerator or a stove or any of these different types of things, and you have a supply chain that you have to secure for your 2027 to 2030 to 2040, you got to do that today. And so we're seeing that now where they're paying premiums to get access to future supply because the supply chains are we've already got problems there, right? But they're just going to be much, much worse. So what happens with the marketplace with these investments? The market is a forward-looking mechanism. So what happens when the day comes and it's already here? It's It's already starting. We're already just starting to see these valuations move up. When the market catches on to this stuff is going to explode in price because, and it'll be very difficult to take a position. If it doesn't work out in, call it 18 to 36 months for some of these to be very profitable, then I'm wrong, okay? But I think you're going to see some big profits on the board by then because you've got to see these companies lock in those supply phases and supply chains down the road. And that is going to be stair-stepped valuation bumps for these companies that are eventually probably a lot of them are going to get bought out. And some of them may be bought by, almost pseudo-government entities, like in the US with this vanadium asset. This is strategic.
So this is a story that's probably going to run and run.
What people that are green don't realize, if you want green or clean energy via batteries, you need to be mining friendly. You need to go into the dirt and take the components of the metals to make the batteries to make the clean energy. You don't get one without the other, and it takes time and money to invest in the ground, and that needs support of some of these mining companies. It's going to take processes, and it's worth it, and it's coming, and I do believe that it will run for a long period of time. It is necessitous for our future, and investors eventually are going to need to get paid off to develop these things, and I believe that we literally are at this apex of where valuations are still low miraculously, and all of these activities are here and growing. The most important thing, though, is that I just don't see a tremendous amount of downside. If we have a deflationary depression across the globe, sure, you're going to have some issues, here. Then you're going to probably want to still own your gold miners, though, because I think gold is going to be a massive haven. The companies that wait are going to pay very large premiums, and you're even going to see many of these begging us for access at huge premiums to where we're trading today for valuations of these assets in the ground in the coming months and years. And it's not in the future. It's already happening today. If you want profit and want something different that you may not have owned before, the mining sector we're in the catbird seat, and these valuations are going to show it, I think, sooner than later.
As you can see, Eric is very excited about this space. There's a lot going on, and he's focused on the small niche players, which might not be everybody's cup of tea because there are risks around those sorts of names. But for long-term investors, this may be a very exciting space to be in. We know about the supply and demand imbalances. As you heard from Eric, some of the world's biggest consumers are taking aim at some of these stocks. And if they're playing, it might be time for us to be playing as well.